Good morning, everybody. Happy Friday. Welcome to the Daily Profit Plan. It is just after 9 o'clock. We just had non-farm payroll. Came in mixed. Markets are up. Futures are higher by about 0.37%. I think a little bit of that sell-off yesterday was maybe a bit of the anticipation that the labor market might be softening. So we did miss the job numbers. I think we were forecasting like 62,000. Forecasting 66,000 came in. Oh, let me share the screen here. Sorry. Let's go screen share. Bring the chat up for everybody. Okay. All right. What's happening, Lee? Morning, Greg. Morning, Mark. Morning, Blake. Balake. What's up, Sandy? I saw 66,000 on the calendar this morning. So non-farm 66K came in 50, revised from 64 down to 56. But I think that the market is latching on to the positive of, and I think this is the more important data point for the year, is now that we have the government shutdown over and we're getting data, on the regular. I think that the labor market wants to see that the unemployment rate will not go up. So as long as we're not getting 4.7, 4.8, 4.9, 5+% unemployment rate, this probably calms the nerves a little bit. So futures are up a little bit this morning. Our gamma levels are quite wide today. We're actually getting some gamma levels up into the 7,000 handle. On a positive note too, average hourly earnings also came in solid with 0.3%. So we do have some news at 10 o'clock with U of M consumer sentiment and inflation expectations. I would imagine those are still going to be, somewhat terrible. Consumer sentiment is probably still going to be bad. Inflation expectations might be elevated, but from what I'm reading on Trueflation and other, metrics, we're still trending lower. Oil prices are sitting, near multi-month lows. That's an encouraging sign. Yields, however, aren't budging. The 10-year yield is up slightly. The 2-year yield is up slightly. It just makes the yield thing sticky, where it's like the Fed could cut another 25 to 50 basis points. It may not change anything in our life as far as improving borrowing costs. If you're doing anything out 5, 10 plus years, 15, 30 plus years, houses might not do anything different other than we have to have supply catch up, rates don't change, or we have to have something where, again, nobody, I don't know if you know this, but when the government says we're going to address this affordability crisis, we're going to give every first-time buyer a $10,000 credit. Guess what every house just does? Goes up by $10,000, right? Hey, we're going to help families. We're going to give a child tax credit boost by another $1,000. Well, everything for daycare goes up $1,000. Like all these subsidies, all these programs just increase the cost of stuff. So I don't want to see that as a solution. The Supreme Court, I don't know what the timeline is, but probably within the next couple of maybe the next couple of weeks, but the next couple of months, we might see the Supreme Court have to make some type of decision on whether or not the 2025 tariffs were constitutional. If it's in fact treated like a tax, then it was rolled out the wrong way. I don't think that is a massive like snow globe effect. I think that does disrupt the plan from last year, and all of a sudden we're removing about $500 billion of revenue out of the U.S. But I'm sure there are other ways that the U.S. is looking at either making up for it, or it's like, we're the government, we'll just keep spending money, right? News out that Supreme Court could rule. Okay, I mean, I knew it was like very near. I wasn't banking on like it's going to be today. It's like I have no idea. It's not in the calendar. Maybe they rule on it today. But the prediction markets, if you go to like a Poly Market or Kalshi, they are like very much low probabilities that they uphold the tariff policies from last year. So that's an interesting wrinkle in the tariff story, which would be if the Supreme Court's like, nah, you can't do that. So figure out another way. I don't know what that does to the market outside of probably remove some of the friction that we saw from last year. But obviously the market pivoted very hard. But I think removing that friction could be a good thing. I mean, honestly, it could be taken in a positive way. If anything, it might help the RSP rotation, right? The equal weighted S&P, and it might help the small caps continue to shine a little bit. So we're looking pre-market. RSP is up slightly. Here is your futures market this morning at 0.32%. The gamma that I talked about, pretty large on the day. We're looking at a gap higher, let's say about 0.3%. Is it I mean, is it gettable that we could get to 75 or 7,000 today, plus minus on the day? Log back in. I think we had like plus minus 30 or 40 from yesterday. So with non-farm, already happening, what is our pre-market? We'll find out. CFR, I have that up here. If anybody's in my pinch point, I was up late doing some videos for engineered options, and that class is ready to rip. So I'm really excited about that. I also have, let's see here. I will give. I'm gonna wait. It's gonna be a bonus. If whoever jumps into engineered options, we'll launch it officially Sunday. If you jump into the classroom, I have another little kind of foundational prerequisite bonus that I'm gonna save. I I found it last night in my archives. It's a video that I did within the last 12 months. I watched the whole thing. I watched my own video for last night, and I'm like, this is a really good video. It's just really good education. I built it out as like, evergreen content. I didn't post it anywhere. I have a PDF guide as well as it's a 1 hour video, and it pairs nicely with my practical options. It's just one video versus like a four to 10 module series, but it is really good information. So anyway, I'm gonna dangle that carrot out there. If you want to jump in engineered options, I'll give that away next week for all new members. I do have a trade also that we can post for Monday morning. Well, I'm just like, we're jumping right in head first into engineered options, which I'm excited about. CFR was a trade that I closed out. It was automatically hit yesterday for profit, so we got in for a 250 debit, closed out for 375. That was hit yesterday, so I updated the Telegram for pinch point right here. We had two trades close out this week. We had Voya hit for profit, and then we had CFR hit for profit. So our win rate on pinch point continues to stay high. It's like 84+%. So good stuff there. I did watch it to speed drop. I sure did, because I was up until just about midnight last night, my time. So yeah, I sound much different at 2x speed, just a little bit higher, but it feels about as fast as I talk now. All right, what else we got going on here? Also, there may be another shutdown at the end of the month. We only fund until the January 30th stopgap funding, right? I mean, if we go into another shutdown, it's like, I've said this before. I'm like, could you just have a no confidence vote? If you want to see the pulse of the voter out there, it's like, if you could just vote for no confidence, I would have voted that, years ago. Because if we have another government shutdown, I mean, look, it is in the best interest, bipartisan wise. Just don't do that again. We just had the longest government shutdown in history. Stop. Like, get your shit together. Let's figure out how to just fund the economy, or fund the government, and stop. I mean, you're playing with workers' lives. I mean, it's like, how disruptive was that? Was that 40 plus days? I mean, I started to question the integrity of every news, like every data point that we would receive for the last 30 days. It's like, I don't even know if it's real. It's like, that's not fun. That's not fun to think like all the data doesn't matter. It's all fake. It's all manipulated. It's because the government shutdown. I want us to have, all of the tools and resources and data to make good, educated decisions. So I get it, though. It's like, it's a short-term solution. It's, Democrats, Republicans will fight tooth and nail, and we'll see. I mean, this is, again, maybe this is like the minor snow globe that we saw in 2025, which nobody knew there was going to be this big trade war, even though it was talked about. And we got one. And then it was briefly systemic, and then it was pivoted hard, and it was the complete opposite. So I do think there's that like potential shock of like, wow, the market's down 5 or 10%. I still think we buy the dip. Lee says, I keep seeing snapshots about engineering options. Is there a section in your Discord about it? Not yet, because I don't have the official like link up for the service. I don't know if the pay page is up yet. Let me find out. Let's go to Prosperity Pub /EGO. Is the page live yet? All right, it's live. All right, so I can officially post it now. We technically talked through it Sunday, but yeah, I'll post that in Discord. Yep, and it will have its own Telegram, so it's going to have a member-only Telegram. I will run this service. I'm going to look at a weekly and monthly trade. Weekly trade will be pre-market Monday. I set it up, put in the pending orders, look for them to get filled during the week, and we spot check Friday, manage it for the whole week. So enter Monday. It's going to expire the following Monday, but usually by Friday, we will have a good feel for whether or not we want to let the trade ride for the weekend and expire on Monday for full profit, or if we're up like 80, 85, 90% of our max profit, we'll just take it and reset for the next week. So I'm looking forward to it. Should be, a very fun service to run. And also my goal is if we just squeak out little tiny positive gains all year, this is what I could envision for 2026 is maybe the market produces, let's say, 8% for the year, 6% for the year. Think about what this is going to look like on a day-to-day basis or a week-to-week basis. We're going to have lots and lots of chop, right? Markets up, markets down, markets down, markets up. I'm looking to see like, okay, if we start here for the week, what is the probability that we can stay there or go slightly higher for the week? Right? Because if we can go sideways or slightly higher, we can turn that into a full winner. And that to me would be either an 80% return on risk or a 100% return on risk. Okay. And there's also some trades that we can make it greater than 100% return on risk. So yeah, it's not bad. And that prepares me for what I think is ahead, which is all of the crazy juice gains, all the crazy momentum, unless we're going to blow the top off and run this thing so freaking hot that we're talking like true bubble type territory. I just think that having, 20+% 2023, 20+% 2024, 17, 16, 70% 2025, the odds of that continuing are just getting lower and lower. So, a positive year, I could see the market plus or minus 5, 10%. We're probably going to have to deal with some drawdowns at some point, but we'll figure that stuff out. Okay. All right. Catherine, I think it's going to be over 2 months. I'm not sure. If you want to come to the webinar, I've got a link for it on Sunday night. If you'd like to come to the session with me on Sunday, let me see here. I do have the link. So this would be Sunday, 7 p.m. Eastern time. Engineered options webinar. Timing and credit is the big difference there, David. Timing and credit, very big difference. Catherine says, I'm in Europe, and because of the time difference, I cannot be there. Yeah, they'll be recording. You'll see it go live all next week. So, I'll be live with Lance on Sunday. The trade service starts like Monday morning. If you can attend, it's available. The trades will still be good as long. If we're filled, we're filled. If we're not, there's still pending orders, good till canceled for the week. And that's no issue. So you'll see it talked about. I want to say Lance and I are probably doing 5+ webinars on it next week. So you'll have a chance to catch that. Okay. As SCOTUS does come out ruling at 10. Is that when it's supposed to be today? Are we literally dealing with Supreme Court stuff today? You'd think something like that would be on the calendar. I think that they would almost vote after market hours because that is kind of a big deal, plus minus on the day. Let's see what we have here. Plus minus on the day. SPX, we're talking. This is not a nothing burger. This is a plus 42. That's decent. So 42.16. Okay. 42.16 for today. That's a pretty wide move. Now keep in mind, we're looking at so futures was up about 0.37, then 0.32. Now it's up 0.22. So we're quickly fading a bit of our pre-market gap this morning. Plus it's like we're here at 21. We're talking a plus minus 42, and we've got a gamma level up here to 7,000. We're talking a plus minus 42. We've got a gamma level down here to 6840. That is 80 points to the downside and 80 points to the upside. That's a lot of gamma, right? It almost makes me want to revisit the good old reverse iron condor, because if we can get out of a dead zone and we can get paid up here, maybe I can risk four to make one. That trade doesn't pay me until later in the day, though. We'll see if there's any aggressive movement. So yesterday was like truly a nothing burger, which would have been great to be a little bit tighter price. I tried, man. I mean, I tried to do like the tight like 25-point move up here. Price never filled me at the price I wanted. That's okay. That's part of the game. But our out of the money trades didn't get filled either. I didn't accept the lower offered credit. So I didn't get a trade yesterday filled. But today looks like we're kind of blowing the gamma levels one way or the other. Um, that's a lot. I mean, plus minus 42 kind of puts us in, we're out of the money, but it is right in the wheelhouse of if we get a directional day, markets can certainly come and tackle it. So yeah, that makes me again like, where do we watch our levels? What I could do is I could set these levels way up here, way down here. If we get direction, let's see what price offers us as far as like, look, you can take this trade, right? Go all the way up to 7,000 plus, go all the way down to 68.40. I might get a little creative on the morning and say, you know what? Give me a broken wing butterfly up here. Give me a broken wing butterfly down here. If it fills for, 50 cents, if I can risk 450 to make 50, but at the same time also have a profit trap if we're up here for the highs of the day. Let's calculate it based on the VIX. VIX recent highs at 15.74. That's going to be just under 1%. 15.74. So about a 0.98% or 0.98% move. So we're going to gap a little bit high. Again, we're fading quickly. It's like that 0.3 is now 0.15. I'll ballpark this. Let's just go 0.98. So based on the VIX around 15.7, we're looking at a 68.53, 68.52 bottom today. And if we have a slight gap higher, just a tiny gap higher, but 0.98, we would go around 69.90 or so today. All right. So I'm just going to write that down. So 69.90 or to the downside, 68.53. Maybe I look at some, and again, broken wing butterflies, you get that profit trap. That's kind of why I like the trades. I'd still be calling the top or bottom. I would have risk that is slightly greater than my reward. But the profit trap, if we're in that area by the end of the day, I wouldn't mind kind of looking at those as my trap spots either. Okay. What time on Mondays are you doing the live session for engineered options? It's not a live session, Steve. It's going to be posted in Telegram. It's a, I'm doing a masterclass next week on Thursday for engineered options, but the trades are going to go out in Telegram pre-market. I'll have like a 9 a.m. post on Monday morning. Okay. All the news says opinions coming out at 10 o'clock. They just don't know. All right. Trump has other ways to claim authority to trades. I get it. I mean, this whole thing could be a nothing burger, meaning like it's all like built up as this huge decision, and the market's like, yeah, we know, we already priced it in, right? Okay. So 10 a.m. Supreme Court. Yeah, we'll see. I mean, if it's a chance for the Supreme Court to stand up and beat their chest and say we're really important, then maybe they want to throw the market for a little curveball. I don't think the market's going to care that much. This has been talked about for literally months, and now that it's here and they've got to make a ruling on it. I did think that the Supreme Court was stacked enough in Trump's favor that it's like they probably don't really go against it. So I have been a bit surprised to see that the prediction markets are calling for them to basically overturn the tariff policy. So we'll see. But if that's coming at 10 o'clock, then yeah, I think that to be on the safe side, we do have news at 10. We had non-farm payroll. We're looking at a plus minus 42. The market, I mean, these gamma levels are not there by accident, right? I mean, having to move 80 points lower, 80 points higher. I mean, this almost sets up like a freaking FOMC day, right? As far as like having a plus or minus 42, which is like double what we've been seeing every trading day this week. And on top of that, having gamma that's 80 points higher, lower, that just looks like a big wide open area. That being said, if a reverse iron condor, so if I have the dead zone And let's say I can get like a 15 or 20 point dead zone here. That might be an easy trade if we can get a dollar. If I can get a dollar here to risk 4 and we do get some direction, then wouldn't that make things a little bit easier? We can just trade it either way, right? So if price goes down and stays down for the day, like, it's 1 in the afternoon, it's 2 in the afternoon, and price is down to 68.20, 68.40, we can get close to a full dollar here. If price is up to 69, 60, 70, 80 all-time highs, and we get one direction or the other, we get the dollars, right? The only reason I wouldn't take that trade is if it's offering like 555 or 560 when I want to have, like, I'd like it to be over $6. So if I get a $6 credit, that means that I'm risking $4, right? I'd be making 1 to risk 4, which is pretty much what I do almost every day with my daily profit play when I go 5 wide. Okay. So I'm probably going to be cautious on, my daily profit play, my typical iron condor, just because we have wide open gamma. But I don't know if the dead zone has to be large. If I have to go like 25 or 30 wide dead zone, not that interested. If I can go 15 wide dead zone, probably take the trade if it pays. Okay. Larry says I was dreaming about it in a reverse iron condor all night. I bet you were. Do you base your levels on yesterday close? What are you talking about there, Rob? So if we have a gap higher, you're talking about my high and low levels. So if we have a gap higher, futures is up about 0.15. So we have a tiny little gap. I'll use my VIX at 15.7, which right now the VIX is like 15.3. So I'm going off to like the last couple hours where the VIX is 15.7. So I'll take that 15.7 VIX, divide it by 16, get my 0.98, and I'll take that tiny little gap higher and then go up 0.98. And I'll take the close from yesterday, which was 69.21, and go 0.98 lower. So that to me is going to be like my extreme high of the day. The only way that I question the low is if the VIX is ripping to like 17, 18, 19, then I don't try to call the bottom of the day. Or what I do is I try to adjust my bottom based on where the VIX is at. Okay. That is very difficult though. Like if the VIX is ripping to like 17, 17.5, 18, calculate it, but you're going to want to give it a little bit of buffer just in case the market overshoots it. Right. But for the most part, that is the safest way that I figured out how to, safely call the top for the day, safely call the low for the day. And what makes a 0-day environment very challenging is when the market is at the high of the day and it stays there. That's why I want to know, like, my calculation needs to be very accurate. Okay. When it's at the low of the day, typically the lows, we tend to see some reflexivity where it hits the lows and bounces back up to close on the day. So if you can accurately get that bottom, then you typically win the day. If you can get the top, it's like, just make sure I don't know. It's like you're either, right here at the top to not be, this is why I like those defense trades so much in daily profit play where we do the butterfly spread, because we're at the top. Let's trap that thing. My risk is here. My profit trap is there, for example, and there's my credit. So the profit trap, at that high is great because I still have like a $5 or $10 profit trap, which is certainly a lot better than, I collected 50 cents at the top. Well, if you're off by 51 cents, you're going to lose the entire trade, right? It's cash settled, but you'll lose your credit. So at least a butterfly trap, if we have that at the top or the bottom, you're giving yourself an extra like 5 points buffer. Okay. All right. We've got a few minutes for the open. Reverse iron condor is going to be kind of my first thought as far as like giving us direction. As long as we can pull, I don't want to go any wider than probably 20 points as far as my dead zone. So the way I do a reverse iron condor is I do an in the money bear call spread and an in the money bull put spread. And if I'm going 20 points wide in that dead zone, I need price to at least move 20 points up or 20 points down for the day. And that would be if I can get like $6 credit or better. $6 credit is going to give me $1 surplus. So that's what I can make on the trade. And my risk would be, because I'm going 5 wide, my risk is 4. Okay. So I'm risking 4 to make 1. And then late in the day, it's like by 1 p.m. Eastern time, 2 p.m. Eastern time, this $1 credit or $6 could be trading for as little as like, maybe 5.20, maybe 5.10. That would be making $80 on the trade, $90 on the trade. I typically just take that trade because if it comes back in, anywhere within that dead zone, I have full risk in that dead zone. So I want to avoid that. Okay. So we will see. So buckle up for the volatility. I think my goal is going to be reverse iron condor if the price is decent, and a broke wing butterfly based on a top or bottom. If we in fact have that 10 o'clock ruling, I don't see it anywhere on the calendar. So I don't know where everyone's grabbing this from outside of, I mean, let's see here. Dollar yen up. Where is my calendar? I mean, there's nothing on the calendar. I don't know if it's on the Bloomberg calendar. I don't even know if it's on the calendar. Okay. What'd that just say there? Supreme Court could rule on tariffs tomorrow. Let's see. I know we have 1 minute before the open. I do think it'd be extremely disruptive. Look, even Trump's Liberation Day was after market hours, right? So, I mean, it is as disruptive as this was last year. I don't think the Supreme Court should come in during market hours and say, we're going to make a vote on this. Major companies, including Costco, Reebok, Xerox, have already started preparing for ruling against the government, filing preemptive lawsuits to claw back the money they paid in tariffs. Now deliberating on the legality of Trump's widespread Liberation Day tariffs and whether the president could legally impose the duties under the International Emergency Economic Powers Act. Okay. Let's see here. It's unclear when the court could rule on the case, but intends to release its first opinions of the year Friday. Okay. So if possible, but not guaranteed, tariff decision could come out then. Okay. Well, off we go. So we have a tiny little gap up. News coming at 10. All right, let's see what a little reverse iron condor looks like. So if I go 25 and 40, so we're trading around 33 right now. If I go 25 to 40, are you freaking kidding me, dude? You want to grab 15 cents to risk 485 today? No, thank you. 20 to 40. This is jumping up to like 560 now. Gosh. 25 to 45. It's like, that's a little bit better. I don't want to take this trade for less than $6. And I don't really want to go too much wider here. Like, let me see if I can go downside. That's 580 going 25 wide. 30 wide gets you six. It's like 620 is only risking 380-ish. But now we're 30 wide and a plus or minus 34. Look at the market just adjusted to the plus minus today at 34. Pre-market was 42.16. So this is why I haven't taken one of these trades in a while. It's like, I don't like how wide you have to go in order to get a $6+ credit. So I feel like when we took advantage of it in the past, it was, I don't know if it was just higher implied volatility or lower implied volatility, but anyway, I'm not going to settle for like 550. Which is annoying. Now I could do this where it's 20 wide and just put in the trade at $6 and see if it gets filled. Right? Let's find out. I'll put the trade into penned. Go in $6 here, see if it fills. I don't think it's going to though. But there's my pending order for right now. And then I want to calculate out. So based on the VIX, it's a little bit easier to call the top than it is the bottom, but I do have some VIX chart alarms. So let me set one here. If we go down at 15, let's see if we break this low at 14.8. So we break the low at 14.8, or we break these recent highs at 15. This recent high is 15.88, and then up here to a round number like 16 or 17. All right. So the VIX is surrounded with a couple chart alarms that will at least get my attention to, maybe modify my top and bottom pick. Reverse iron condor. I mean, I'm just gonna leave it. I was gonna say I put it like 595. It's like I'm seeing a mid price at 550, 580, 565. It's probably quite a bit off of getting filled right now. Yeah, that's what I thought too, Larry. Okay. So plus minus 30 something on the day. We do have some wide gamma. That's one thing that caught my attention this week. We are in positive gamma above 69.20. Path of least resistance is trying to poke some all-time highs. Chart alarm set up here. Do we hit all-time highs again? 69.66. Gamma level, do we go after any of these strikes? Maybe. I'm gonna put a butterfly spread, and it's way up there. I mean, the VIX should not get it. Let me see what this gap looks like. 0.98 from the open. 0.98 puts me up to around 7,000. So here's what I'm going to do. I'm going to see if 7,000. So that trade's pending. I'll post that in a moment. And again, it's unlikely going to get filled. I'm just saying that. Like only going 20 wide on the reverse iron condor, it's probably not going to fill. But I've got it there, and it's in the middle, so it's not going to overlap with any of my strikes. My called top. If the VIX is going to go down, I'm using a slightly higher VIX than the current live price. 15, 15.7, 15.8. That should be a pin around 7,000. So I can do one of two things. I can either go 95. I can go 90 to 7,000. This one is actually kind of what I'd like to do. 90 to 7,000 and then go 15 wide here. So right now, that is saying that it's a debit. If this turns into I would accept 50 cents credit. We have to go really aggressively. I'm going to put $1 into this, $1 credit. And that would give me a break-even price of 70.11, which is above my 7,002 calculated high. So I'm going to try to go dollar credit on the top. Okay. Again, we have to have like the 10 o'clock tariff stuff. If it's coming out from the Supreme Court, maybe that, juices the market. Maybe the VIX gets smashed. I mean, it'd be odd to see the VIX go down and see the market rip to highs that are above, the calculated move, right? If the VIX goes down and the SPX goes up, we shouldn't see it go higher than what I've already calculated. That's the whole point of having that correlation. Okay. So let's see what we get. All right. And then to the downside, I'm going to put another trade similar to that in case there's a lot of disruption to the downside. We have gamma down here towards 68.40. I'm going to go, I'll go 45 by 35 and try to give myself a 10 wide trap. So that'd be 68.45, 45 by 35 by 20. And I'll watch and see if this one gets filled for $1. So that would put my break even down to 68.24. I'd be risking 4 to make 1, but I also have $1,000 profit trap. So if we have some crazy volatility today, that to me is a pretty safe way to position for it. All right. So what I'm going to do is I'm just going to take a screenshot of these 3 setups and make sure that the activities section has it correct. So they screwed this one up for me. So all right. See how this has a sell. That's not correct. So I'll just type it up in Telegram. All right. So daily profit members alerts coming right here. All right. Daily profit play. Friday plan. We had non-farm payroll. We have 10 a.m. U of M news, and potentially Supreme Court. What would be like talks? It's not necessarily the ruling, but it'd be administrative talks. Supreme Court talks. Tentative. So I'm setting up high and low trades as well as a reverse DPP to see if we get direction for the day. All right, so this is the SPX 19 expiration. The in the money call side is the 25 by 30. So 69.25 call, 69.30 call, and then the 40 by 40 or the 45 by 40, 69.45, 69.40. Looking for $6 credit. That is pending. Doug, I'll share that in just a second. I see your comment there. Yep, I'll show you. And then we have I'm doing broken wings. Then I'm doing the calling the top with profit trap, SPX 19 expiration, buy the 6990, sell the 7,000, and buy the 7015. Looking for $1 credit. I would settle on that one for 50 cents. I still like the trap, so I'd settle for 50 cents if it's offered. Pending. Calling the bottom with profit trap. SPX 19 expiration. Buying the 68.45. Selling the 68.35. Buying the 68.20. $1 credit pending. The bottom is subject to change if the VIX spikes higher. So I'll be monitoring. All right. Those trades are in and pending. Okay. So that, I mean, it just makes me feel like there's no reason to force a trade today. I don't know if 10 o'clock is going to be just this big old window of news and price action. Gamma levels. I mean, if I didn't know the Supreme Court was doing anything today, if I didn't know there's 10 o'clock news, then the trade I'd look after is we open here. We expect like a plus or minus 42 on the day. So we opened up around, what was our open here? We opened up around 34. I mean, it's very possible that we can get to 70 plus today. So a very simple trade would be to put in a butterfly spread up here, right? If we get to, 60 or 70 in the morning or higher, obviously, like getting a profit trap up there. Let me see what that price action looks like. Let's say we can get to 75. So if we go 65, 75, 85, it would cost you $1. You'd be risking $1 to make potentially $10 or net 9. All you need price to do is get to the higher end of the expected move, which is very doable. And, obviously if it comes up early in the morning, I'd want to be taking some profit. So if that dollar turns to $1.50, $1.60, $1.70, $2, take the profit. So far that's pretty inexpensive, right? So, I mean, I don't mind that trade. You risk $1. You're still within the expected move, so that's gettable. Where does it become more difficult? Well, if the market is going to open here, fall to this 69.20 zone, then it doesn't get to there, right? It doesn't get there at all, and it's like, well, I don't want to have. And this is my least favorite thing. This gamma to me is bigger, larger, but it doesn't mean that it has to get there. Right? Like the largest level is 7,000. That seems like a pretty tall order. Like that's greater than the expected move to get to 7,000 today. But I still think we can test it. I mean, these gamma levels are so reliable. And I see this stuff, every single day. So I wouldn't put it past the market to try to get to 75, 80, 90 today, maybe even trying to test 7,000, which would be an awesome milestone, by the way. Okay, Doug, on my services. So here's a list. Daily profit play. You're here for daily profit plan. My daily profit play, we're looking to trade every single day. Waterfall income, we meet on Mondays. We trade live at 11:30 a.m. Newsbreakers, when earnings season kicks up, we'll have some trades posted there. Double ups is what I look at for index flows during the week for a 0-day trade. Pinch point is a scanner dashboard that I run for volatility trades. Engineered options is my new service I'm launching this coming week. It's Sunday, Monday. Sunday's live webinar. The trade alerts go live on Monday morning. I'm going to be doing weekly and monthly trades on engineered options. As long as the market can carve out a winner, I will try to engineer the trades where we can get an 80 to 100% gain on our risk. Okay, Project Options Edge. That is my discretionary service with a lot of the ways I'm managing my book for friends and family, which is we utilize some buying power. We do some ratio spreads. We do some sell puts. We own some shares. It's kind of like my kitchen sink approach, which is there's a lot of strategies we can trade. Project Options Edge. We had 63 trades last year. We won 97% of them. We had 61 winners out of 63 trades. So, I'm very picky when it comes to what I trade, but when I do post a position, I expect to win it. And also, even if it gets into trouble, I want to repair it. Okay. So and again, I don't know how new you are to trading options. I do have some foundational courses where the engineered options course, by the way, is coming with my full practical options. If you are a lifetime member in any of these other services, you have a practical options full course. This is a $500 bonus course that gives you a nice foundation. And also, if you're coming into my engineered options course next week, I'm going to sprinkle in another bonus class. I'm not going to tell you what it is until next week once I'm doing my masterclass on Thursday. But it's a really good 1 hour video with a PDF that it's like, man, I did that. I want to say I did that video like either late 2024 or early 2025. And it's just another kind of timeless piece of education where if I have anybody ask me, I'm new to trading, I'm new to options, I'd like to learn more what you do. It's a great prerequisite to just jump in, soak it up for an hour, and trade the markets bullish or bearish with some really, really good education. So anyway, if you want to join any of my services, then easy peasy. You can email the team support@prosperitypub.com. Or you can give us a call and have somebody walk you through my course catalog and what you want to do. So somebody asked me this week, and I'm sorry I didn't actually get to it, but daily profit play, what do we do every single day? It's income plays on indexes. What are we trading primarily? We're trading SPX almost every single day. We're focusing mainly on iron condors, reverse iron condors, or some type of spreads to get a market that is. We're trying to trade market efficiency on daily profit play. Look, when 0DT came out in 2022, I was running one of our strategies for the hedge fund I worked with. I had the 0-day book is like short-term trading opportunities. I traded the daily profit play strategy as well as butterfly spreads, and did quite well. It was the interesting part was like learning more 0DT, seeing how fast things work, and what I ended up doing was I stopped being directional. And I thought it was easier to basically give myself a profit trap for the day, like a butterfly spread, or be directionally neutral and be siding with market efficiencies and market makers where the market stays within those expected ranges. So we do that every single day. Waterfall income, we're looking at swing trades between 45 and 90 days. We can trade anything that is index related. So we have been in all of these all of these symbols. We've been in SPX, XSP, NDX. Yes, I've taken a couple of those trades. Obviously, the QQQ is the ETF version of that. We have traded the SPY. We have traded the Qs. We've also traded futures. But if you're not a futures trader, futures options trader, don't worry about those. But it's index related. Okay. And it's we really literally we call it strategy 1, strategy 2. Strategy 1 is great. It's cost effective. Strategy 2 is my favorite when I'm slightly cautiously bullish. I can just add a little buffer. Doug's been trading for 10 years. No, you're good, man. Then you just tell the team what you want then, right? You tell the team what you want. Newsbreakers, we're looking primarily trading earnings catalysts. I subscribe to a software called, or it's a service really, but I subscribe to Option Slam, and that gives me 20 to 30 earnings reports, and I can get a average earnings print. I can go from 0 to 13 days. Usually these trades are out a couple of weeks, like 1 to 2 weeks at most, and we're looking for a big move on earnings, and sometimes it proves that the probability is to sell premium only and basically call the top or the bottom and let the market, with the news and all the high flying volatility, it's like just, get the volatility drain that happens after earnings, right? So we try to go after like solid reward to risk trades and capture a few bucks on earnings. Double ups, primarily a 0-day trade, and it's mostly on indexes. I follow the gamma levels very, very closely here. I do a lot of butterfly spreads and double ups. We nailed one this week. We had a 75-cent risk that ended up cash settling for $830. 75-cent risk that settled for $8.30 some cents. It was over 1,000% gain. So it's fun to have those trades, but usually, if I'm risking, let's say $1, I generally am going after like $1.50 to $2 a profit. So I'm trying to make more than 100% on these double up trades, which makes it a lot of fun because we're managing very large winners, and that's really the challenge of the service is managing winners. It's not the hard part. The hard part is we find a good trade, we take a good trade, it's low risk, and then we manage the winners. And that's really like the art and science of this service is, hey, look, I'm up 150%. You can take the profit if you want to. If you want to let this thing ride and try to manage this winner to the best of our ability, then keep an eye on it later in the day. So a lot of times with these, they're cheap enough that I'd like to do 2 contracts, and then I could take one off the table, eliminate all the risk, and then let one ride and hopefully manage it to the best of my ability. Okay, pinch point scanner. I built this volatility scanner, which is when the markets are compressed, when the markets are choppy and sideways, I'm looking for a volatility expansion move. Our scanner is searching for over 9,000 stocks. And I've added another element to this where I'm only looking at like the top like 1,000 liquid. We've taken some symbols I've never touched in my life, and we had winners. So like CFR, couldn't even tell you what that stock is off the top of my head, but we had a 50% winner this week, and it closed automatically with our broker platform. Okay, so what do we trade in this one? Typically, we'll either do an omnidirectional trade where I'm looking for some direction, because markets do this in pinch point. We have this accumulation cycle, and then we have a breakout, and then we have distribution, and we have a breakdown. That's like the core of the strategy. So what I'm doing with my software, the scanner, is like this, and then once they build up, it's looking for the breakout points for us to be participating. Now, I get into these trades oftentimes during the consolidation. So I'm usually going out 45 to 90 days, and that way when we get a breakout, one way or the other, we get paid. Okay. It doesn't look like a reverse. It should be a reverse. Are you seeing that, Alan, in the alerts? So if I sell the 25 call, buy the 30 call, that's an in the money bear call spread. If I sell the 45 and I buy the 40, that's an in the money bull put spread. That is correct. That's correct. Right? So where's price at right now? Price is trading at 69.35. So if we're at 35 and I do a 25 by 30 bear call spread, that's in the money. If I do 45 by 40, that's a bull put spread. That's in the money. That is correct. In order for me to get $6 credit, I'm probably not going to get it because I'm not going wide enough on the dead zone. But I don't want to go wide. I'm going to go 20 points wide. So it hasn't been filled yet, but that is correct. Okay. Let's see here. Yep. Doug says, I saw your chart said positive, negative, gamma. Yep, it's right here. Probably saw this, right? So this yellow zone is the pivot point between our positive and negative gamma for the day. Again, this is real-time gamma. This is literally updated. You can see here, like these blue lines are kind of oscillating. I mean, the sticky levels I see today, it's like we shot up here towards 50. That hits my 50% level. Traders that follow me, that I'm an affiliate for the service. This team is called Dynamic Trend. They built me this. They built me a 0DT package. Okay. And so you can see the same stuff that I see here with, look, the gamma level that I have is like 75. 69.75 is a pretty big one. Okay, that's the strike. So do I think that we can get there today? Well, of course we can get there. Okay. Nice, man. Yeah, I like spot gamma a lot. I like Brent and the team. I think it's a little pricey, but I like their hero and trace. I keep kicking it around like I want to subscribe to that, but I've been using the software for 6 years, and it has helped me make some pretty good decisions. The only edge I could probably justify like spot gamma is if I get the hero or the trace and I wanted to get those like intraday reversals. When you have the it's like the purple line that when things start to like pivot for the day and you can kind of call that bottom, that'd be about the only way I'd kind of add to my elements of trading right now. So, it's a lot of money to take on a whole new learning curve, and maybe that gets me a couple trades, that I like. But having this stuff for 6 years, like I have called some great tops and bottoms. I've called some great flows. Like this stuff doesn't happen by accident. So again, if you're familiar with gamma, like this is pretty good. I got you. Yeah. So SPY gamma, I get it. It's pricey. I asked them during like Black Friday. I'm like, hey man, you guys are offering like a 50% off for a month. It's like extend it for the year and I'll buy it. Like if they did a 50% off for the year, I would have subscribed. But they didn't. They gave it for a month. I'm like, that's ridiculous. I'm not going to spend $3,000 a year. I already do on many things. But this is a zero DT that I have. This team built me my own bundle, and you get everything you see with here, the real time gammas plus your ATR levels, and this is exclusive for zero DTE, and it's $945. Okay, their industrial package is $3,600, but they also have much more than just like this gamma. It's like this is their gamma squeeze index. But they also have like risk rewards. You can do matrices and sector scans. So I've been using this for a while. They give me a little deal on the full suite since I'm an ambassador for them. But anyway, if you like it, you can send me an email. This is a good way to, if anybody wants it. So Chris Pulver Pub at gmail.com. And the nice thing is you're familiar with gamma, so it should be pretty straightforward. But yeah, man, I've watched this stuff every day for the last going into June of this year will be like the last 4 years I've watched zero DT every single day. So it's not on accident. Now, having said that, I told everyone, like, look, this software for me, my best practice is if I can go after a gamma level and it's inside of a 50% ATR, that's a pretty good trade. So if I wanted to go after the 70 or 75 zone today, that is a little bit more challenging to get to. It's going to be cheap, but it's going to be lower probability. So I probably will pass on that trade. I'm not saying it can't get there, right? But most likely today, if we have, here's where we started yesterday's close, here's where our open is. We had a pre-market 42. Do I think the market is going to go beyond 42 points and stay there? It shouldn't. That's the whole point of market efficiency. It shouldn't go beyond a plus or minus 42 from the open today. Okay. But could it? Of course it can. Of course it can. All right. So far, it's 9:56, news coming out at 10. Is the Supreme Court to go with U of M news at 10? Maybe. I don't know. Let's find out. So if you email me, yeah, Greg, so you can email me, chrispulverpub@gmail.com. Just ask me about the gamma software. I have two services that I'm ambassador for. This one, they built me this exclusive zero DT package. And then also I'm ambassador for Tanuki Trade, which is what I like about this one is this is their real-time web app. And I can go out multiple days to see where the gamma is lining up out, today and also for the rest of the week. When we talk about these like major monthly expirations or end of the week expirations, I can get a sense of like where is all of the gamma, the flows lining up for the week. And then that's just on like this, the gamma scanner. But if you look at one thing I like to do with the option screener is if I'm looking for, just a positive gamma squeeze, you can actually have, up to 200 symbols that will give you, what's my top 5 or 10 picks. So right now, my positive gamma squeeze, when I've got Ford, FCX is Freeport McMoran, the Russell, Peloton, and Wells Fargo, all these look pretty good to posture some type of positive move. Now, it doesn't mean I want to just buy calls. Like that's not my style. Okay. I don't love buying calls because you have to get in, get out. You have to manage them super aggressively. And I'm not that trader. Like I like spreads. I like lines in the sand. So a positive gamma to me is number one, if I have positive gamma, I can probably do some type of ratio spread. I can probably do some type of naked put. It doesn't have to be super long, like 30 days out. And if I were to do, let's say, FCX is a copper play. It's been pretty solid. I've got some trades out for project options as already. But if I wanted to look at the The gamma squeeze. In addition to the gamma squeeze, I'd also consider, is there some skew in this? Right now we have skew that's pretty low. So your implied volatility skew, if we have like insane call skew, this shows like positive skew around 23%. Does anybody know what a jade lizard is? Okay, a jade lizard is, it's a stupid name, but it's a naked put and a bear call spread. So as price is, let's say this is price in the middle. Okay, I sell a put and then I do a bear call spread. So I'll put BC up here for bear call spread. And if price stays inside this range, I get a net credit on both, right? I get a credit on the put, I get a credit on the bear call. The goal is also to make the bear call spread tight enough that even if price blows through the top, I lose this, but I still net credit on the game on the day. So it doesn't really have, I mean, it does have some upside risk, but all it's going to do is eat up a little bit of the credit, but not going to cost you anything. Okay. If price goes down, do I like the stock enough that I can own it and then repair it with a covered call? So I like that strategy. That's kind of what I use this scanner for, actually. Wells Fargo just disappeared. Interesting. Silver, look at this. This skew is insane, by the way. We have 101% call skew on silver. That is crazy. I don't know if that's because the recent margin adjustments the CME did, or just because it's expensive everywhere. I don't think anybody planned on silver and gold to have the year that they did, and so now you're dealing with a ton of skew. That also makes it very expensive to buy protection, which is kind of crazy, right? The market's been going straight up, and it's now like, probably 3 or 4 times the price just to buy puts and protect yourself. So we talked about doing some butterfly spreads to make it a little bit cheaper, but you don't, I don't know if I would just say dollar cost average into it. Unless you're leveraged on silver, just stay with it, buy some dips. If we get any pullbacks, I'd buy some dips. Yep. Okay. That's the sign up page, right, Blake? Yep, that's the sign up page for Sunday night. Yeah, thanks for sharing that. Yeah, we'll share that. And then
would you want to share that at the end? I figured I'd just send it out now.
No, that's good. That's good. No, thanks, dude. I'm saying the checkout page. We'll share that on Sunday.
Yes, exactly. That's just like to save your seat and lock in a spot.
Yep. Perfect.
Yes, sir.
All right. So still having a bunch of chop for the day. Let me recenter this thing. Let me take a screenshot. Yesterday was a big nothing burger, which sucks. I didn't get a trade that I wanted. I tried yesterday. I mean, Blake, I think I canceled, 2 or 3 trades yesterday, readjusted the levels, and had 2 pending orders for the day. It's like didn't get filled on a single one. It's fine. It's just like I tried. I just didn't get the fill. Prices were really choppy, and I just didn't accept the lesser credit. So I was just being stubborn. I'm like, I'm not taking a 60-cent credit on a 5 wide. I want $1. Give me $1. I haven't tried the 250 on the expected moves, which I rarely do, but I'm like, just give me something. Didn't.
I know it's this week's been tough for me personally. I feel like you've probably had a better week. I've been kind of sick, so I've been
okay,
resting a little bit, but
I'm not complaining about we're 9 days into the calendar year and I'm up 75K. I'm certainly not complaining.
Yeah, that's good right there.
So
man.
yeah,
awesome.
I mean something's going on. And honestly, a lot of it is this. I mean, I'm still benefiting from a lot of the premium selling that I did back in March and April of last year.
Yeah,
I did staggered expirations. I still have trades running into the end of this month, into February. A lot of times those flows aren't super disrupted, and that's a good thing. Like I mean, and I tend to find that it's like if I like a trade, then I tend to give myself like let's use an example. I'll just use an example. Let's go SPX. Okay, let's say that we get a drop on SPX. Hypothetical here, but just hear me out. Let's say that we get a drop on SPX right here. Okay. Now the question is, are we going to stay there? Are we going to go lower? Are we going to go higher? Now, I would guess that if the market is going to go and finish the year positive, we're probably going to get back to 7,000 plus for the end of the year. So let's say that we do, for some reason, this market structure finally changes and breaks just a little bit. We had this little correction, the market rolls over. Here's one way I can benefit from it. If I took this level and I started putting on even simple, like, I mean, it's SPX, so I can do credit spreads. And if I said, all right, I'm going to do a 6,500, okay, I'll sell, I get in the habit of like freehanding this thing when I should just type it. So if I sell a 6,500 put and I buy a 64.95 put, and I can get, let's say I can get $2 credit for that trade. Okay. Now, if I do that trade to, let's say November expiration, right? So I can stack up this trade. I can do 6,500 by 6,495 for multiple November expirations, multiple December expirations, and even into January, where the markets tend to have like flows through the holiday season. So if we are going to see this is a level that the market responds to, now I'm not saying to bet the farm and go crazy, I'm going to risk 10% of my account. But if this was like a 0.1% move and I stack up 5 or 10 trades, I've got a 1% gainer. And it's just an income trade that if price goes back up, I've got some pretty good trades that are built in. And this is some income that I can plan on for the entire year, you know? So that's what I'm saying is like what happened last year with Liberation Day is even though it was a little risky at the time. It's like it felt systemic for that first couple weeks in April. But once we pivoted hard, all of the premium selling that I started way down here, all the buying that I did down here, once we got back to these highs, I peeled off some of my shares. Once I sold the premium, I just let those expirations November, December, January, February. They're still paying me. They're still paying me. So as long as the market doesn't feel like crashing all the way back down to April lows, I still have a lot of profit to roll in here the next, probably 30 to 60 days. So what I'm looking for in 2026 is, I'm not saying I want the market to crash 20%. I'm just saying like if we get a better opportunity that looks like a chance to buy a dip and participate, I will look at kind of a similar play, which is I just want to have some participation, generate some income off of a dip, see if the market can reflexively bounce off a low, and I tend to do pretty well with that. One of the crazier traders that I know, he has a fund. He manages a fund about like $35 million, and I've seen. I mean, his clients have to either love him or hate him. It depends on what he's doing for the year, because he's the type of trader that when he likes something, he just stacks up call options, not spreads, call options. And call options are extra sensitive because if the thing goes up, he can make a lot of money. I've seen him turn, on a $30 million fund, he's literally made like 50% a year on that fund many times. But I've also seen him be down 30 to 40 to 50% as well, which the emotional swings of a fund with $35 million to be, up 50% or down 50%, that seems like kind of an all or nothing approach. And like I said, his clients love him or they hate him. But they tend to stick with him, or they get a lot of money and then they peel it back and they just like, yeah, I'll give him maybe a fraction of my capital so I don't take on that type of crazy risk. But anyway, overall, it's like he's still doing it. He's been trading for 20 plus years. It's just he takes really big swings in the market. He's been wrong in wild fashion, and he's been right in wild fashion. And anyway, I think the hard part is if he has a choppy year, he's not going to do very well. So like he needs the crazy swings. He needs the crazy high flying volatility. Anyway, just there's a lot of ways to do it, but that's not my style. My style is if I can pull 20 to 30% for the year with taking less than 10% drawdowns, I'd rather do that. I'm keeping everyone pretty chill. All the accounts that I manage is like, I don't want anybody to call me. Nobody should be calling me worried about their
Yeah.
positions,
You don't
right?
want
It's
a
like,
phone call like
don't
that.
bother me. I don't want to take that much risk, right? It's like there's no reason for us to be worried about a 2 to 5% drawdown when the upside should be 15, 20+%. So that way it's like you don't have to ask how the watch is made. You just know that it tells time. Right. All right. Kirk, did you get filled on that thing? 250 out at 32 cents. Did you get filled on that? I didn't get filled on that, dude. I'm jealous.
My man Kirk got the fill.
Yeah, I mean, that was the trade, dude. So 250 out of 32, that's a
You
great
see,
winner, man.
Spy's kind of rolling over right here. I guess SPX.
Yep.
They just announced that they're not ruling on this case today, so that's all the suspense this week for nothing.
Yeah, right.
Everybody was
Uh,
waiting on it. Everybody was talking about it, and then they're like, you know what? We're just
uh,
not going to rule on this today.
yeah.
Okay. Now gold's flipping up. Oh my gosh, that's crazy.
All right. So gold is up, silver is up. Let's see if like the
Yeah,
overall markets are taking a nosedive. Let's go mags for a second. So S&P is
yeah.
rolling over a little bit.
I saw some
Here's
Nvidia puts come in too.
okay. Let's see. Is our VIX jumping up a little bit? Kind of, but we haven't broken any alerts. So I mean, 1588 is still fine. We are dumping back down. We're at positive net game of pivot right now. So right here, that's going to be an important spot. Um, look at how this changes. That 6975 was a large gamma. Now it's starting to light up the 6900. So low at 6900. The open for the week. Let's see here, open for the week. Just go look. Remember, go back to our plus or minus on the day. We opened up around. What's my opening price here? Opening price is 69.34. Okay, 69.34. The pre-market plus minus was 42.16. So 68.91. If we come down to 68.91, that is right here. That would be where the market makers would say, okay, that's our expected move for the day. So look left on this chart, 68.91, good to know. I'm going to put a line right there, 68.91. And for the week, I don't think that's by accident. I mean, again, we might not even get there because the market has filled today's gap. But if we have this is where the market started from last Friday, gapped up into Monday, and we have some pretty strong support around that 6,900 handle. So, does the market come back down to retest and then bounce back up? It's possible. Does the market try to come back in and fill this gap? It's possible. I have, believe it or not, I have engineered option trades that are sitting right there. So we'll see what happens. Intel straight up. Intel.
Man, what did it do
Yeah.
today? Oh, it finally broke out, huh?
Yeah. I mean, it is. I've already been selling calls, dude. It kind of sucks. I cap my upside around the mid 30s. I'm just rolling it now because I can, but I'm probably gonna let this thing get called away. I bought this thing at I think we bought it here around $18, $19. So it worked out fine, but it's like I didn't expect the government to take a 10% stake in Intel. So and drive
Yeah,
the
no
price. I mean, this
kidding.
this stock was dead, man. It's like this. I was like, of all the chip stocks, how is Intel not showing any love with everyone loving semiconductors and chips? And here we are, 100% up. So
It's just because their chips aren't that good. That's
yeah.
pretty much
Well,
it.
they say they're supposed to be good. They're saying they're trying to be
Uh,
good. They're
they're
trying to play catch
trying.
up. They're trying.
Yeah,
Yep.
I think AMD still got a beat for now. I
Probably. I
could
think.
argue that for a long time, but it's
Yeah.
just because I used to have an Intel chip, and there's a reason I didn't upgrade to an Intel chip when I built my new PC.
Yeah.
So I think if you know, you know.
Yeah, AMD is not bad. I have it. This is we closed this one out for a good win. I think I have another trade on AMD for Project Options Edge. AMD, yep. So this one's out to,
Nice.
that's a ratio spread. Let me change this to project. So rename group, be ratio there. So ratio spread, we pulled in a $1.30. Let that one ride a little bit. All right. Any type of price action that we're getting today, right back to the positive net game pivot at 69.20. Trying to play. Oh, shoot. Not shoot. Let's see if we get some direction today. All right, Blake, we're in for the reverse iron condor, bro. We're in at $6.
Just got filled.
Yep, just got filled. So now we need. So Supreme Court doesn't rule. Non-farm payroll lackluster, and the market's like, "Yep, I'm going to fill you now." So now we need at least 20 points of movement. My dead zone's only 20 points, so let's see if we can get above 45. So I need to go above 45, 69.45, or I need to go below 25, 45 and 25. So I will be brutally honest. If we don't have a directional day today, I'm going to be pretty pissed. Like going nowhere yesterday before non-farm payroll is totally fine. Go somewhere today, please.
Let's see
Like
it.
let's try to get to 70.75. We need it to be greater than 69.45.
Yeah.
Right?
Let's see
If
what
it's going to drop
happens.
and it's going to come back and fill the levels for the week, then it's like come back to 6,900, but do not stay here for the rest of the day. All right, so let's play around with that. So apparently there's no Supreme Court drama today. The trade got filled for SPX. I'll update that in Telegram right now. So that got filled. DPP
All right.
update, reverse DPP filled at $6 credit. So need SPX to be greater than 6,945 or less than 6,925 for the $1 profit. If this trade shows, let's say 530 debit or lower, I'll look to protect. Okay. Now I want to take a look at the setup for the rest of the day. Okay. Now I'm going to go old school here. We opened up at opening price today is 69.34 17, I think. 69.34 17. Okay. The plus minus was 42.16. I'm curious, and I might regret this, but I'm curious if I do a 69.34.17 plus 42.16, 69.76. All right. So if I go 69.76, so if I'm going to get a 250 spread in this one, I might as well go 80. So I'm going to go 80, 85. Make sure that's not overlapping anything. So I've got that broken wing butterfly there. So I'll go 80, 85. And then the 6934.17 minus 42.16, 68.92. I'll go 90.85. Fudge, man. Isn't that crazy, dude? Like that was the original market maker move in the plus minus on the day. This is now trading for 55 cents. I was going to say I want to take this trade for like 250. I don't think there's any way that's going to get filled. But you know what? We're going to try it. 250. Okay. So if we get some direction, our $6 spread will trade down to like, so the max profit in this one is we trade it for 6. It can cash settle for 5, which means we get $1. If I see it trading for like 550, 540, 530 during the day, I can just close it out and take the winner. Okay. Rick says SCOTUS next week now makes it volatile. Yeah, but dude, it's the same crap we've dealt with literally all last year. Wait and see, right? All the anticipation around the Fed, all the anticipation around Trump, all the anticipation around the Supreme Court. You just got to, I mean, you can't let it be a reason you stay out of the market. You got to believe like market makers, they are efficient for a reason. I mean, day in, day out, this is why we've seen over the last 3 years that zero DT has been around, and we're growing in popularity with like the average SPX daily trading volume is like 55%, 60% of freaking option volume is a 0-day trading now. It's crazy. What I'm saying for next week is like all the stuff gets priced in. So it should be like let the market makers do their job, let them stay within the expected range. That's probably the higher scenario trade is they're going to stay within the market maker move, right? So yes, occasionally the market does rip higher. We saw it a little loose during the holidays, but I think this week, I'm trying to think this week how many days. How many days were like beyond the plus minus? This one, that was within the market maker move. This one was not. So Tuesday was not. Wednesday was, even though this market sold off hard by the end of the day, we opened here and it was within 1 point of the market maker move. So yes on Monday, no on Tuesday, yes on Wednesday, yes on Thursday. And today so far, I mean, I think it stays within the market maker move, which is plus or minus 42, especially with that Supreme Court being axed from the day. Dave, yeah, I'll post that. That's totally optional. DPP optional trade. I'm using the pre-market expected move from today's open. So the plus minus 42.16 with the opening bell price at 6934.17. So I'm going SPX 19 expiration. I think I was up to 80 something, right? 80 by 85. 6980. 6985. 6890 by 6885. 250 credit. 1-to-1. This is now showing 55 cents credit. So unlikely to fill unless we see some decent direction this morning. Okay. Busy stuff. Greg says filled 69.85. You went 20 wide, 280. Damn, dude. Grabbing $2 in 40 minutes, Greg. Wow. Awesome job, dude. That's a big fat time decay, huh? 280 down to 80 cents in 40 minutes. Thank you very much, Miss Lippy. Yeah, that's great, dude. I'm happy for you. Sean says, I'm not in, but if I were, I'd just close it and get out. All right. Yeah, Blake, I have been sending that link. That's what I've been sharing all week. That's what you posted earlier, right? Yeah, you posted that earlier. We'll share that again. We'll share that again in a little bit. Yeah, good stuff. Okay, let me see something here on our daily profit play. So daily profit play. So DPP for $6. And I mean, it shows us up 20, now down 30, up 10. It's like it's a little wide. I mean, starting to fill back up to the upside again. We have the 50, we have the 70, the 75. I mean, positive drift. I mean, can the market give us a little bit of direction today? I hope it can. I certainly don't want to have like the full $4 risk today. If I'm wrong, I don't want to risk the $4. So I'd like to see the markets give us something in the day. But, you know, we're getting some pretty big fluctuations. Like it's plus 30, it's minus 30, it's plus 15, minus 20. Like I don't think I can get it closed for anything that I'm really happy with right now. And the day isn't done. Right. So right now, you know, 27, high at 49. That was a 22-point move. It's just after 10 o'clock. I'm curious what the 10 o'clock was for plus or minus on the day. It probably dropped quite hard. I mean, we started out at plus or minus 42. I feel like at 10 o'clock it was probably down to like sub 20 again. All right, good stuff. Yeah, we'll see. I mean, look, if we creep up here towards 49, 50, 55, then our reverse looks pretty good. It does seem like the market, you know, after catching a little bit of, I mean, structure wise, if we're going to hang on to positive gamma, you know, what do we do today? We came back and tested the lows. It's like, what better opportunity to just kind of buy the dip of the day, which is fill the gap and then let this market work its way higher, right? Rick says, thanks, got my hedge off as quickly as I could. All right, let's see. Let's see if we get some flows today. Charlo went off SPX crossing 45. Okay, good. So we are poking some intraday highs again. Let's see if we can go a little bit higher. Biggest gamma level starting to fill up around 70, 75 now in real time. Come on, baby. Just give us a little break. Just a little break. Get above 50. See if we can float a 60 plus. That should give us some profit on the day. So I'm gonna set this one for a quick. I'm gonna go 550. Just try to grab a quick $50 out of this if I can. And I'd feel pretty good about that. If I grab $50, I'll be happy. And if we just like look like we're ripping to the upside, we get to 70, 75, then I'll probably if I can, I'll remove the 550 debit to close it, and I'll just let it run to probably like a 515 or 510 and close out 85 or $90 on the contract. The one thing I don't love, I'll just say this right now. The one thing I don't love is this. My option volume sentiment, we have 36 versus 32. That's showing a bit of a battle royale where it's like Bulls and Bears might have the same type of control. So I don't know. I mean, the executive decision would be we can probably take a small win right now. It's trading for like 570, 560. Let me see if I can grab a small win. This is going to be, I don't know. This is why this trade, I love it, but I also hate it because I don't really get the trade that I want. And what are you banking on with a reverse iron condor? You're banking on the market to give you direction. We literally have 500 trades that tell us we get paid regularly when the market doesn't give us direction, right? So let me change this to like a 570 for a second. See if I can just grab a small winner here. 570, 575. Okay, you got filled at 575. Good. I just got filled. All right, so I'm out. 575 just got filled as well. Okay. Again, I feel like a girly man. I didn't hold on to it very long, but I'm taking the winner. So sorry I bailed early, but DPP update. I don't know. Today's I still have more trades pending, obviously. Today's DPP entry $6 credit, closed 575. Taking a small winner. Okay. Winners are good. It's better than nothing. What does price need to do for the rest of the day? It needs to go up. So, like I said, that trade it has to be greater than 45 or it has to be less than 25. And, look, it can get there. It can certainly get there. Okay. But when I see that this is not really giving us a huge edge to the call side, who cares? I mean, honestly, at the end of the day, it's like, yep, it did what we thought. It hit the 69 and 70 gamma, blah, blah, blah. It's like, this is real time trading. It's like, I don't freaking know. I don't have the crystal ball, but I feel better about taking the win and not worrying about the trade. And then what I'm doing for the rest of the day is if I get the direction that I want for the plus minus 42, I wouldn't mind getting a 250 fill and watching that thing trade down to $1 or maybe even a full winner. If it stays inside of that 42-point range, I'd love to see us get paid on that too. Okay. So at least we're taking the trade off for a winner. Now I have a couple more trades that are sitting and pending, so we'll see what happens. But, I feel better. I tell you, like it's a good trade. But you remove the Supreme Court stuff today, and it's like, okay, I could see the market doing little to no movement considering that volatility literally jumped double. We expected a 42. Yesterday was 25.97. Wednesday was 22.23. Tuesday was 24. So, I mean, we had nearly double the expected move today. And after you remove kind of the element of volatility, then we'll see what happens. So anyway, if you can get a better close than I did, do it. Try for 570, try for 565, right? If you can do a little bit better, right now it's down to about 565. Maybe better, but you're probably not going to get much better than like 550 or 560 on that trade right now. So let me know if anybody's in or trying to get out. Can you get out for like 560? Get another 10 cents out of that. 550, even better if you can. Real accounts. Don't tell me a paper trade in this thing and close it out for $5. That's not possible. Let's see here. Randy says, In 80 cents, out at 20 cents. Good Friday win. Now relaxing college football. Who's playing today? What is it? Is this this isn't like national championship, is it? Who's playing some football today? Is it the national championship? Freaking Indiana. Who thought Indiana would be a football team this year? Um, oh, semifinals. Okay. Let's see the bracket. Let's see here. Peach Bowl. So the winner of this, do we have the other side of the bracket? Miami. Oh boy. Yeah, that's I had my core group of friends like who wants to throw money on that. I think I've watched one football game this entire season. I watched two Lions games this year because they were on during Thanksgiving and Christmas Day, so that was pretty sweet. Yeah, I watched zero college football. When I saw that Indiana was in the bracket, I was like, all right, this is weird. Thank you, transfer portal. All right. Anyway, hope it's exciting. If you're betting on it, hope you win. Yeah, they're good. Yeah, I watched them whoop on. I was at the gym when they were beating up on Alabama. Looked like they beat them pretty easily. And then we got the Super Bowl creeping up here too. Yeah, you got playoffs in the NFL. That's exciting. Yeah, that's what puppies and babies. Yep, that's what happens. Life comes at you fast when you got kids. Blake, enjoy that. I know you guys are coming up here shortly. So all the fun goes out the window. Just kidding. All right, let's see. Today's trade. All right, who's in the reverse iron condor with me? And if so, are you getting a better fill? Did you take it out with me at 575? Can you get something better? 565, 560. We've got a little bit of direction, but again, I'm still happy I'm out of it. And let's see if we can. I kind of like the look of this one. If we can get this one filled for, I would be okay taking even like $2 on this trade. So if we get a decent amount of direction up to the 69.80 handle, that's still a long ways away. We'd have to hit all of my gamma levels to the upside. We'd have to hit the 100% ATR and hit some upward gamma. We'd have to overstretch it actually. But if I could see that one offering $1.50 to $2, I might still take the trade. But I'm going to leave it at 250 right now. Bruce got out for Larry 570, Bruce 560. Okay, good. I'm just glad he can get a better fill than I did. Nice, nice, nice. Okay, very good. All right, sorry, I don't like the dead zone, but I've got a bunch of messages here. Since I'm launching engineered options on Sunday, it's this developer, this copywriter, this person. So it's been popping up all week. I did so the classroom is completely finished. I'm waiting for one indicator where I have it published on TradingView. You get a workspace for engineered options. I'll talk about this for a couple minutes. But I'm going to also try to build out a workspace for you on Thinkorswim. So if we have Thinkorswim users, TradingView users, I have an indicator for that. trade, which is looking good for a winner with price greater than 68.90. Cool. Let's see here. I was in the 94% of the NFL this year, below my average in years. Kid told me I should just use sports picks instead of this. So, Sean, you're saying that you should be a sports better versus the market, dude. You got a better edge in the markets. It is fun. Like I played in this golf tournament last year in um, November, and it was like everybody wanted to bet on everything. We had so it's like you had a it was a 4-day member guest, or 3. I'm sorry, we had a practice round day 1 and then a 3-day member guest, and you played 9 whole matches. So we had 6 matches for competition to see if you could win the flight, and then if you won the flight, you go into the championship flight, and it's a sudden death playoff with literally every winner of every 10 flights until there's a winner, and you just play. It was a crazy fun event. But the extracurriculars of we have a short game contest, we have a closest to the pin, we have a long drive, we have a this, like the people that weren't participating, just the freaking like the side action gambling was like degenerate. That's all I could think of. I'm just like, man, it's cool. It's like people just want action. It's like I guess that's why the betting markets are so fun. But what's funny is like I truly hate casinos. Like this to me is not gambling. This is calculated risks. This is calculated betting, you know, and it's like you have a historical edge. So you stay in the market long enough, you figure it out. You trade the right strategies, you figure it out. Don't overcomplicate it. Don't overtrade it. Let the markets be what they are. They just find ways to go higher. Yes, they'll have deleveragings, and yes, they'll have pullbacks, and there'll be some ugliness, and there'll be some bear markets every now and then. But that is again, this is not a shameless plug for energy options, but it's like you have to think about this. I run a lot of services already. Okay, I've got plenty of trades already. I probably clocked over 20,000 trades last year between all these services. All right. So, do I really need more stuff? No. But what can I do? I can simplify. I can simplify when it comes to how do I want to make money the easiest way. How about we have something that wins about 70% of the time with a 1-to-1 or better, and space that five D. So that's what engineered options is. Have the bandwidth to do all these crazy difficult things when it's like I'm busy every single day. I watch this market opening to closing bell every single day. What else? My monthly bonus. If you want to go supercharge this thing to do dailies, you can. You still have a decent like 54% edge to do dailies. If you go yearlies, you have a 71% edge. That's pretty good, you know? So there's a lot of ways to do it. Um, but weekly and monthly, obviously, there's a little bit of action there, and we're participating on a regular basis. But I build it in such a way that if the market can stay flat or a fraction of 1% higher, we can get paid full credit. So I'm looking for a minimum of 80% return on my risk or 100% return on my risk. And I'm not going to do this the first week, but I have a feeling I know myself. It's like there are ways to make these trades also pay us more in reward than risk. Okay. But I'm going to focus on the 80 and the 100% because that's really, really simple stuff. And that way I can get as many traders as possible, in the service. It's a straightforward strategy mix, and we go from there. But, there's always flexibility in trading. That's why I love trading on options. But when you think about what is simple, I'm trying to think here. Where's history in my guide? This guy. So this is actually from the classroom. I just finished this up this week. This is the stuff I'm talking about. So since the market efficiency has come in since 1973 with the options market, a zero-sum game, these are the house edges that we're playing with. And what's crazy is all these percentages are higher. Serenity, that is incredible. Serenity says my trading account's up 154% since January 1st. You talking like this year or since last year? I'm hoping you're not leveraging your pants off to be up 150% in 8 days of trading. This year, wow. Well, what was the big runner? Some silver, some gold, some Baidu maybe. These are not day trades, no, Sean. They're going to be weekly, so they're no there's no pattern day trading. Serenity Silver, yeah, that makes sense. Um, so yeah, there's no pattern day trading here. And by the way, I don't know when the timeline is, but I'm pretty sure that by the end of this quarter, there's going to be some progress made where pattern day trading is no longer a restriction for traders. That was coming from the CBOE last year, the CME, the CBOE, some of the regulatory bodies. I don't know if that has to be a final approval of the SEC, but I'm hoping that is the case because that'd be a nice win for retail traders. If you don't have 25K for a margin account, you're not handcuffed to say you can only trade 3 times a week as far as like day trades, right? So there's all sorts of workarounds, but it just makes it easier when you're not restricted. So we'll see. We'll see if that actually is the case in the next couple of months if that gets removed. Okay, so this is one of the slides here. What's cool about this is the last 5 years, these have all gone up. The daily has gone up to almost 57% since 2020. The weeklies have gone up to almost 60%. They're 59%. The weeklies are up to like 66%, and I'm sorry, the monthly, yeah, like 66 monthly, and then the yearly we're up 80%. I mean, is it going to stay like that? I mean, I don't know. But we also, for engineered options, can make this our edge, if not better, because I'm not trading the market bearish. I did trade it bearish when I went back and tested this thing for 10 years, and it proved to be, it's not that it wasn't worth it, but it wasn't more profitable. As far as like my capital, my money on the line, if I went from a 3.8 profit factor by only trading the market bullish, but then I traded the market bullish and bearish, and it goes down to a 1.9 profit factor, I still make money. My win rate went from, this is around a 64% win rate. If I just did bearish, I went up to about a 71% win rate. So as far as putting your capital to work, would you rather be at a 71% win rate, 3.8 profit factor, or a 64% win rate, 1.9 profit factor? Granted, you get more trades, but guess what? Capital efficiency wise, you make more money with less work if you're just bullish. So again, like this is like, this to me is like very simple. Let's trade the numbers. And if the week can carve out just a break even week, we can still get paid. If the week is going to be up a fraction of 1%, we get paid. If the market's up a ton, we get paid, right? If the market is pulling back, I have levels with defense. So here's my workspace that you can have. This is my indicator that I built. So I have my 50 period, 144 period. I have my level and then my defense levels. Now I'm only interested really in 2 of these. Level 1, I technically call this one level 0 because this is the start of the week, and then level 1. And the reason why is because this trade and this trade were filled less than 5% of the time over 10 years. In 10 years, this got filled less than 5% of the time. It's not worth the pending order for me. So I'm just going to focus on these 2 levels most every single week or most every single month. Okay. All right. I heard March. Yeah, I thought it was going to be Q1. Yeah, that's what I thought too. So hopefully that's a big celebration for retail traders this year. Okay. So I'm trying to think. Strategy guide. I mean, I talked about this this week as far as reward to risk. Where do I place my engineered options? It's right here. We have adequate win percentage. We're winning about 70+% of our trades. I could probably bump that a little bit higher. But my reward to risk is 1-to-1. But I also have a little crafty way that I'll be able to make this greater than 1-to-1 as well. So I'm going to focus on the 80% or 100% where we can get that slightly, fair to 1-to-1 is good. Like 1-to-1, if we lose and then we win, we're a wash. We stack up our trades with our probabilities. We win. It is really easy to grow an account. You don't have to overcomplicate this stuff. Okay. Are we sending the 25, 30, 40, 45? Are we sending? I already did. We're already out of the trade, Maria. This trade was filled for $6 and I closed it for 575. I had some traders close it at 570 and 565. Right now it's coming back into the dead zone, which isn't going to be super painful right now, but it's probably trading back to about break even. Let's see what the trade is at right now. Right now, it's still trading for like 585 to 9. Try to get out for if you want to get out of the trade, get out for like 585, 590. Take a small winner on the day. Don't let the dead zone grow. Okay. All right, good stuff. All right, what else? Um, I'll do this. I'm gonna go. I'll give you a little sneak peek here. Maria says, tough. Well, just let me know how I can help. Where do you want to start? You know, there's plenty of ways to participate. Engineered options. It's like I don't know where people are at. Here's what I'll say. This is a pretty interesting transition. Like if you come to me in this free session, like daily profit plan, yes, I have services that my alerts are paid for, right? You want to be in my trades, you want to be in my service, you want to look at my my track record. I went through this week in closing playbook. I talked about in Stockmania. The quadrants of trading, you can make money in this environment and this environment and this environment, right? So if you have a high reward to risk down here, even if you have a low win percentage, you can still make money. Okay. If you have a high win percentage and low reward to risk, you can still make money. If you have a decent win percentage and a decent favorable surplus reward to risk, you can make a decent amount of money. So 3 of the 4 are profitable. You can't make money if your trades are low reward to risk and low win percentage. That's where traders struggle. And usually this is what happens to most traders. Why do traders lose money? Because their losses are typically way, way, way too big, right? So what sets back like months and months and months of good trading? One ugly, nasty risk, which is why I am so adamant and I'm begging traders to just trade small and trade consistently. Get on base, right? Get on base, base hit, base hit, base hit. That way this is stopped. It doesn't get nasty. Stop it, right? So that's usually what happens. What ruins the trader's year? Yes, a bad pick might ruin the year if it's undefined risk, but it's defined risk. Who cares? Go just find another trade. So anyway, that's usually what happens. So you can make money in 3 of these 4 quadrants. This is where all of my services are at. Do I have any services that I'm running right now that I would say are categorized in the bottom left quadrant? No. If I did that, I wouldn't trade it, right? So, win percentages. Our daily trades and daily profit, we're winning almost 90% of our trades. Waterfall income, we're winning over 94% of our trades. Project options edge, almost 97% of our trades. Pinch point, almost 85% of the trades. Double ups, this is my lowest win percentage, 59%. But our average winner is way bigger. This is the one that 75 cents turned into over $8, 1,000% gain. Wins like that are possible. On average, we pull a 125 or 150% or 200 plus percent, but we've had 300 plus percent and 500 plus percent. It happens. So even though it's a low win rate, the reward is so awesome. Newsbreakers, we typically win more than we lose, and we still have a 70% win rate. Engineered options, we're at 74.7%, and we're going after 1-to-1. Okay. So that's where my services are at. It's like they're going to be fine. Give me a sample size of 50 trades or 100 trades and do some math, right? If you take a strategy right now, like this is a very typical daily profit play reward to risk profile. I need to win over 80% of my trades in order for me to be profitable, right? So if I took 1,000 trades and I win 83%, 84%, I'm still going to make money. I'll still make money, but I'm going to have lots of little wins and then my occasional big win or a big loss that will set me back, but I still make money. So the nice part is Okay, let's win 89% of our trades. Let's win 90 plus percent of our trades. Now it's easier. We still take a lot of trades. We still make money. But when you go 1 to 1, it's just like you don't have to win a ton of trades. 75%, I want to be a trader that wins as much as possible, right? So even winning 70%, still pretty good. 75%, great. You're still making money. 65%, you're still making money. 55%, you're still making money, right? You can afford to be wrong. It's okay to be wrong. Same thing here. 1 to 1. Win 90, win 80, win 60, you still make money. 1,000 by 1,000, some traders take some big gains. And I don't know. I don't know if traders have this like false sense of confidence because I'm taking the trade with you. I'm not going to say false sense of confidence. Like I'm confident the trader else wouldn't take it, but I'm not necessarily swinging for every trade at thousands of dollars. Look, if I'm taking 20,000 trades and I make $50 or $100, I'm going to make plenty of money. But I also trade where my emotions are very much in control because it's never about the dollar amount. I mean, I did pretty well last year and I made jack shit for Bitcoin. Bitcoin is up 25% for the year and it paid me $0 by the end of the year when it dropped 30%. Okay. The good thing is I washed a lot of it, so I didn't really have it cost me a ton. But realistically, for my open positions, it probably pulled away about $130,000 of profit from me because that's where I was earlier in the year. I still finish year solid. Bitcoin is still a good play for me, bigger picture. But yeah, I mean, I could have done better. I think I traded okay, you know, but it was lots and lots of base hits. Did I have some home runs? I guess. I mean, my campaign trades, I was long silver, long gold. They were great trades last year. I took a lot of profit on those. I'm still in them, but I took off a lot of profit and then I got back in and I'm starting to reallocate my portfolio to gold and silver again. Okay. So anyway, there's a lot of ways to do it. So, risk reward is important. I was going to say, I'm going to give you a little teaser here. This is a video that I found last night. That was a pleasant little surprise. I'm like, oh yeah, I remember doing that. And then I watched it and I'm like, that actually is really good. Like I'm very proud of my Practical Options Foundation. So if anybody is wondering like, how do you get started? What's some good education? How can I learn the fastest way possible? Practical Options. Okay. And so I kind of took like a very concentrated version of Practical Options and just did a one trade mastery PDF and a one trade mastery video that if you join me for engineered options, if you join the service, I will give this to you. You can also have Practical Options as a bonus. I will give you this one trade mastery to go on top of that. Yeah, I mean, I found it and it's really good. And I mean, you'll see me walk through the video. I walk through the entire slide deck. I talk through all these examples. I show the risk graphs to talk these trade strategies. I do an example here. This is one of my trades I took on Tesla and how I started position for it. I looked at 3 bullish scenarios and 3 ways to trade Tesla, and it was a long call versus a bull call spread versus a bull put spread. It's all expressing the same thing in the market. I'm bullish on Tesla. So which one costs the most, pays the most? What's my biggest return on risk? Where's my break-even prices? So I just do all the math here. It's like, it's a really good example. Like the trade worked. Okay. But where people got paid a lot of money is, yes, Tesla went from the lows in the, this was like the, 250 running up to 4 and change. And then we hit these highs. Then we come all the way back down here to 220. We go all the way back up to all-time highs. So talk about volatility on Tesla. That was over the last couple of years, right? So anyway, it was a fun like hour-long video, but it's like I think you should have it. So join Engineered Options. I'll give it to you. We'll replay on Sunday night. Yes, we'll have replays and we'll be live a bunch for the week, Jeff. So if you catch us, I mean, Lance and I probably have 5+ webinars next week in addition to Sunday. So if I can get a recording, Blake can probably grab a live stream. We can either do it here in this daily profit plan session, or just we'll have a bunch of different slots. If you're in my Telegram, it'll be posted. Join us for a webinar, or I'll talk about it here. So, but I'll see if I just get a recording from Sunday. Cool. All right. Speaking of, I'm gonna have to do a read through on my engineered options here in about 38 minutes. So I'm just gonna go check on the fam upstairs, see how they're doing, and just make sure we're good for the day. I've got a pretty busy day ahead. So anyway, look, I'm excited for engineered options. I think you should be too. It is good trading. It's really simple and it's low maintenance. set the trade up. We'll talk about it. We've got a masterclass on engineered options next week on Thursday to bring everybody together. That gives us a chance to get in Sunday, Monday, Tuesday, Wednesday. The trades go live on Monday, so we'll have pre-market trades on Monday, and then we'll have a big masterclass on Thursday. Cool. Yep. All right. Sounds good. All right. If you have any questions, you can always email me, Chris Pulver pub at gmail.com. You can email our team, support at prosperitypub.com. Let us know we can help. Cool. All right. But I will say this. I'm actually quite excited and optimistic for 2026. Over the holidays, I was in a bit of a funk thinking like just another year, like this big fat tail risk. Nobody knows what's going to happen. That's kind of, after just more reading, more research, just kind of come to terms with like, look, I had a good year. I'm starting over to do it all. I think that's what it is. It's like you have a solid year. It's been a solid 5-6 years. I've done pretty well. Um, and I realize like, even if it's a grind, I know how to grind. I know how to make money in these markets. What I know that I do best is if I exercise some patience and some discipline, the market will give us the opportunities, right? So I think that this could be, the challenge for the year would be if the market is going to go really, really quiet, really, really sideways and carve out next to no returns. I think we'll still be okay. I really do. I think the market's going to find a way to play like a lot of break evens, which engineered options will actually be good. Daily profit will be fine. Waterfall income strategy too. We know that's good, right? We give ourselves a little buffer and we capitalize on that. And then we'll figure it out. Like there's going to be volatility and pinch point. There's going to be individual stocks that fly all over the place. That's fine. But I'm talking like the broader market. Where are we going? Do I think we have some flare ups and some volatility? Possibly, you know. But to me, the biggest thing would be like, yeah, this Supreme Court thing might be disruptive, might be, or it's a big nothing burger and it's all about the midterms coming later this year in November. So that political risk is the thing. If we have, the pendulum swing aggressively the other way, but that's a big uncertainty. I'm not going to trade around it, and I'm not going to, stay out of the market because of it. It's like I will position based on probabilities and a mechanical edge, and have a plan B and a plan C if I need it. So it's not going to stop me from trading. But when an opportunity shows itself, or like the kind of the market will tip its hand a little bit to you, then we can figure out how to take advantage of that. And I think being at the ready and being nimble and opportunistic is better than being fully invested. One of the more challenging years I've had in recent memory was I did so well in 2020 and so well in 2021 that I got a little cocky in 2022 because I stayed invested in 2022 and I sold a bunch of premium and I sold a bunch of calls on my own positions, and I was riding out these big profits for the last couple of years, and I didn't really enjoy the profits. I just stayed fully invested. And I ended up dealing with a pretty decent drawdown. I was down at one point about 12% for the year, but I ended up carving out about a 19.5% gain for the year. I did that because my inflation play was very profitable. I mean, it was up like almost 30% on just like commodities and value in the early parts of 2022. And then the rest of the year was basically saved by Forex. I had a lot of positions on the dollar and the Japanese yen, and that worked out pretty darn well. Even though it was a battle, I was short like an idiot on dollar yen while I was long everything else. So I got paid on Aussie yen, CAD yen, Swiss yen, Euro yen, pound yen, New Zealand yen, but yet I somehow was an idiot and shorted the dollar yen. So I had to fight through that trade for like 6 months, but the other ones paid very well. So that helped kind of juice my gains as well as stocks and options by just fighting through the markets. But carving out a 20% winner for 2022 is a pretty big win for me considering the average market was down. I mean, we had a peak to trough of 35%. Market finished down 18% for the year, and I flipped that and I was up almost 20%. So, I can figure it out. It's a lot easier to do it when you got some dry powder and some margin on the sidelines than the market shows us opportunities. So, all right, I'll let you go. Hope to see you on. I'll be in Stonkamania, I think, this afternoon for a little bit. We got some more to showcase. I look forward to seeing everybody on Sunday. You want to come out for engineered options? Let's drop that link one more time, Blake, for engineered options if you've got it. If not, I think I've got it right here. Sunday, 7 p.m. Eastern time. Okay. And when you get into class, we will have a trade going out Monday morning. So if you want to jump to that webinar Sunday, or if you want the buy link, I can share it with you Monday. The trades are going to be live on Monday. They are setting, pending, good till canceled, and the trade is in for the week. Okay, and then we'll have a masterclass on it on Thursday. So let's get everyone in class. Let's talk through it. Let's talk strategy. Minimum credit 80%. Ideally, we're going for 80% to 100% return on risk, and we'll keep it very simple. So the dashboard is all set up. Whether or not we're going to be bullish and taking the trades, we obviously will have some pullbacks here and there, but we just 1 week at a time, 1 month at a time. We just grind. Cool. All right, buddy. I'll let you go for today. See you soon. Bye. Thanks, Blake. See you.
All right, on the daily profit plan. We will see you guys next week. Actually, you know what? I take that back. We'll see you guys on Sunday. Chris just posted that link again. I'll post it again too. Go sign up there, save your seat. You don't want to miss it. Set your calendar. If you're not there, don't worry. Just be here on Monday and we'll stream it again. And I guarantee you that offer from Sunday will still be good on Monday. We tend to do that, just like that first week. If there's a really good deal, we're not going to just be like, hey, if you're not there on Sunday, too bad. No, we're going to extend that deal out for everybody. So if you got something going on Sunday, like I know I do, I got church Sunday night, so I won't be hosting it. But we'll definitely be sending that stuff out. We'll definitely still be signing people up. So don't worry. If you can't make it Sunday, be here Monday and we'll stream it right after this. So thanks so much, folks. Have a great, wonderful weekend. Enjoy some football. It's wild card weekend. I'm not a huge college guy. I know a lot of people are big college football fans. I love the NFL. So we got wild card weekend, playoffs. So it's going to be great.